progressed. All right, let's head on over to the market picture as well. Globally, of course, let's not forget that things in the G20 summit were great, but it seems that things have somewhat subsided. Fears on global growth and how that sentiment is faring has certainly pushed the market to perhaps be a little more cautious. And now the United States threatening tariffs of around $4 billion on European goods coming through from what has been an airplane subsidy issue that has come to the fore. So how does that play into the markets? Well, a bit of a mixed picture across Europe. For the most part, when you look at the big counters, the FTSE 100 out in London and the DAX in Germany doing fairly well, but the CAC 40 out in France, unfortunately, unable to keep up with the momentum of the rest of Europe. On the local front, we are stuttering along and unable to gain. Tencent not doing so well across in Hong Kong then, meaning that locally Naspers has tended to suffer as well, so the industrials will certainly go off. The all share as well falling a touch there and just above that 58,000 point mark. Where perhaps does it sit? Will we see the buoyancy of June come back into play? Perhaps now is a whole lot more cautious trade. On the resource counters themselves, they've certainly struggled as well of late, but today is a much better day for them. And you can see the resource counter itself going up nearly 48,000 points thus far in the day. The gold counter performing somewhat the best there. And let's remember that the gold price has had a bull run of late, but perhaps now petering off just a touch as riskier assets do come back into play. And that will be seen as well then in that resources picture, which follows through as well right now. And you'll see that the likes of gold, platinum and oil as well have certainly been at loggerheads and continue to struggle. So let's get onto that graph then. And you'll see that the gold picture has gone nearly touching that 1,400 point mark thus far. Of course, a bit of a struggle there. As I said a little bit earlier on, it was a good day for gold having passed it, but now a little bit lower. Platinum has had a bit of a nervy start to this year, to be quite honest, and having reached the midway point, still faring just above that 800 point mark. And oil now slipping as concerns about global growth mean that perhaps the world will not be buying as much oil. So they've had to pull down the price. That is despite the fact that OPEC Plus had agreed to supply cuts, which should be pushing the price a little bit higher. Quick look at those currencies as well then, having reached the best mark in 3 months for the South African rand at around 14 rand and 2 cents against the US dollar. It's now gone a little bit weaker, 14.04 now against that US dollar, 17.84 for a British pound, still below 18 rand, which is certainly a good mark, and below 16 rand then for that euro as well. Quickly check in on the details then as well coming through from this picture. Chris Gilmore, independent analyst, joining us live from the Johannesburg Stock Exchange as we unpack this a little bit more. Negativity today, Chris Gilmore, good afternoon to you for the local bourse, that is. But the positivity across the world, perhaps a little bit of a cautious stance, you reckon? G20 summit, not enough being made there.
Good afternoon, Arabile. Yes, I think you're quite right. You've put this rather well. Yes, there was indeed a lot of optimism coming out of Osaka over the weekend. But I think we've got to bear in mind that if you look at the S&P 500 as a proxy for global growth in equity markets, I think this is probably more of a kind of temporary phase, because if you look at the fundamentals, the earnings growth is not that wonderful. We've got major problems in the Far East, notably in China. It's definitely slowing down. The tariffs that the Trump administration have been applying on China are taking their toll on the Chinese economy, not so much on the US economy, but certainly the Chinese economy. And everywhere you look, global growth is not wonderful. So I think this should be seen in context. It's very welcome. And as you say, we're hitting new all-time highs on the S&P. Wouldn't surprise me if we hit 3,000. But beyond that, I think you have to have much more of a fundamental input. And at this point in time, I can't see where that's coming from. So enjoy the ride while it lasts, because it's unlikely to.
Yeah, because that was going to be my next question. The sustainability of any uptick from here on in would probably depend a little bit more on a durable or more sustainable deal, right, out of that China-US trade situation. And the more we don't have that, you know, the more the market sort of feels like it lingers on and there aren't any real fundamentals to sort of push it in the right direction.
That's right. Look, this Trump administration is using trade as a weapon. And I've said this on your program and other programs before. Robert Lighthizer, the U.S. Secretary of Trade, is a very clever individual. The whole process by which America in the old days used to be the world's policeman, that's gone now. So America doesn't trade. As a percentage of trade to GDP, America has one of the lowest ratios of any country in the world. So it can afford to use trade as a weapon to get the kind of political results that it wants from so many countries. So I think what's happened with China is you've got a bit what I'd call a ceasefire. Many tariffs are still in place, and okay, they've agreed not to apply the further $300 billion worth, but that doesn't mean that they can't be applied in future. So there's this kind of strange no man's land that we're in, and I think once that realization sinks in, that the tariffs are hurting the Chinese far more than the Americans. They're hurting the Americans to a very small extent, mainly because America doesn't trade. But once that sinks in, I think markets will realize that you have to come back ultimately to the fundamentals, and the fundamentals do not look fantastic.
All right. Well, what are the fundamentals of that oil price? Now, just above that, or rather petering around that $65 a barrel mark, we saw OPEC decide they're going to extend those supply cuts until March next year. But fears of the global growth perhaps not going as high as one would have liked means that the commodity may not be purchased as much as one would hope. Is that going to be a sustainable basis, or is there something that perhaps the OPEC countries can do, the United States perhaps trying to find a way to shake things about? I mean, they certainly want prices a little bit higher too, surely.
Look, if you look at the American situation, America is now the largest oil producer in the world. Russia and then Saudi Arabia coming in at number 2 and 3 respectively. Excuse me. So the Americans are actually sitting quite pretty. Many of their producers, we're predominantly talking shale here, in Texas and in other parts of the country, can produce profitably at not much more than $30 a barrel. So at these levels, they're actually doing very nicely, thank you very much. As you rightly say, the global growth situation is not auguring particularly well, so the world doesn't need as much oil. And that's even if you ignore the fact that more and more countries are looking at alternatives to oil. And then thirdly, I think you've got to look at OPEC. Is OPEC able to keep its members in check the way it used to? No, it's not. I think many of its outliers, some of the smaller producers, are doing their own thing. They're disregarding what the big boys like Saudi Arabia are actually saying, because they've got problems at home. They actually need to pump as much as they possibly can. So what I'm saying is the ability of OPEC to police these cuts, it might look good on paper, and yes, they might be saying, well, we'll keep these in place until March, but actions speak louder than words, and the ability of OPEC to actually enforce those cuts, I think, is highly questionable.
Yeah. Surely the rand should be below 14 rand by now.
Yeah, well, it's interesting. If you look at the against the British pound, that I think is interesting because Brexit is obviously taking its toll on sterling, and below 18. I mean, a few weeks ago it was 19 and a bit. It was close on 20. So it's definitely strengthened against that one. Against the dollar, I think you're right. As I think when the markets see through this bluff and bluster from the Trump administration, they'll realize, and particularly when we get a rate cut from Jerome Powell and his FOMC, probably later this month, I'm factoring in 3 rate cuts this year and maybe 1 next year.
Sure.
And that being the case, the dollar will start taking strain, and emerging market currencies around the world, including the rand, I think will start to improve. So you've got to ask the question, how much of that is already built into the rand? Probably not all of it. And to answer your question, I think yes, the rand, all other things being equal, if we can resist the temptation to score own goals here, and we've been pretty good at that up until now, then I think the rand should probably strengthen to below 14.
Chris, always great chatting to you. Thank you so much for your time. Appreciate it there. 14.12 against the US dollar is the state of the rand right now. Of course, many questions around whether it should really be below that mark or not. We'll continue to unpack a whole lot more economic data as well right after the short break. Do stay tuned to Market Sense. This is On Point.